Welcome to Build a Better Financial Future, the podcast for first-generation high earners who want to do more with their money. If you're ready to take control of your financial future, you're in the right place. Now, please join your host, Louis Rosa.
Hi, everyone, and welcome back to another episode. The podcast was called On My Way to Wealth, so I have an update about that. As you can see, we have switched the name to Build a Better Financial Future. Just a little background on that. As you know, I'm a financial advisor. I have my own company called Build a Better Financial Future, which you can visit at buildabetterfinancialfuture.com to learn more. So I basically just did a rebrand where I combined the brands. Before I had my advisory firm where I do investment management and financial planning. And then I also had the On My Way to Wealth podcast. And now everything's just going to be the same. It's all one mission, one message, one website. The onmywaytowealth.com website will just be forwarded to the buildabetterfinancialfuture.com website. So thank you all for tuning in and also for your patience. For those of you that have been listening to me for a while, and there's been quite a few months that I took a hiatus. You know, we had tax season and with the rebrand and just a lot of things going on at work. Positive things, you know, expanding the firm and everything. So I am back. So thank you again for tuning in. I wanted to take the opportunity to talk to you about a mid-year check-in. This is something that I'm doing with my clients now. And I thought that some of you would benefit from doing this even on your own, even if you don't have a financial planner. But I was thinking about how we tend to take care of our cars. Usually, especially if you have a newer car, you probably follow the regularly scheduled maintenance. You know, I have a car, you know, it's fairly new. I have an app and it gives me prompts like, hey, it's time for another oil change or for service or whatever. Like based on a certain amount of mileage, then I bring my car in. And I'm pretty good at following that. And I started thinking, well, maybe we should do that ourselves, right? If you're working with a financial planner, then you're probably doing this already. But if you're not, it's something that you can do yourself. And I want to share 7 things that you should definitely do when you do your mid-year check-in. You know, it's time to basically check in with yourself, revisit your goals, and see where you are. You know, first of all, are your goals still the same? Has anything changed? Are you still on track? Is there anything that needs to be adjusted? You know, New Year's Eve, it's a long time ago, right? Half the year has gone by. A lot of us make some promises to ourselves and some goals, and that's typical. But then life happens, right? And then maybe you haven't had the chance to continue those small, frequent habits to achieve those goals. So it's a good time for you to say, all right, I still got half the year to go. What's going on, right? So revisiting your goals is number one. Remember, what gets measured gets improved. I'm a big believer of that, whether that's finances or if you're trying to lose weight, for example, or gain weight, whatever the case might be. Measure, right? Weigh yourself, measure body parts, right? Waist, chest size, whatever it is that you're trying to improve, figure out if you're making improvements. And the only way to know that is if you actually track it, right? So you can do the same with your finances. You can track your net worth. You can track your balances on your investments. You can track if you're paying debt down, whatever it is that you're trying to accomplish, it could be measured. If it gets measured, it gets improved. The second thing that you should look into is your emergency savings. Like I said, life happens, right? So maybe you had already done a great job at saving, but something could have come up that may have derailed those savings. You know, you might have gotten a layoff. You might have had a short-term disability, or maybe something unexpected came up and you had to tap into those emergency funds. And if you did, and you had the emergency savings, congratulations for that. But maybe it's now time to rebuild, right? So we want to make sure that you get back on track with that. And if you don't have adequate emergency savings, then there's still time for you to start one or start adding to one. So very important there. Another thing is to check in with your budget. Cash flow management, whatever you want to call it, because I know budget is not the most desirable word when you hear it, right? Because a lot of people equate it with perhaps just being restricted, right? With lack. budget. It's like, I don't like to be restricted, but it doesn't necessarily need to be. You can budget things for fun as well. So some of the things to look at in your budget is managing your subscriptions. Take a look now and say, okay, I have these recurring subscriptions that happen either once a year or every month. A lot of us do, right? Am I using this thing? Is this actually something that I'm using? If not, you can get rid of it. Maybe there's a subscription that you should have that you don't have right now that could be helpful towards your goals. Could be a budgeting app. It could be, a workout program. It could be a podcast, anything, that might help you that you currently are not using. And maybe you might be able to make a trade and say, okay, I'm no longer using this subscription. I'm just going to kill it and do this instead. But check in on yourselves, because when things are automatic, could be a good thing, especially if you're saving automatically, putting money into your 401k. But when subscriptions come out automatically from our bank accounts, we also tend not to notice, or from our credit cards. And sometimes, even if we're not using them, it's just so much easier not to do anything about it and just let it happen, right? So be proactive with that. Also, think about holiday spending. If you have purchases that you do during the holidays, we're only a few months away, believe it or not, right? So think about it. Where's that money coming from? I mean, ideally, you would have wanted to budget for those throughout the year. But if you haven't yet, you still have a chance. And the reason for that is because it's a lot better to budget for those than to end up using a credit card or a bonus on something that you could have used to beef up your emergency savings or invest, right? So you have time now to adjust. So think about how much you may want to spend during the holidays, and you can still take action on that and create a fund for that. Also, vacations, summertime, a lot of people go on vacation. Start thinking about the next one. I'm a big believer in balance, right? You also got to treat yourself. So create a vacation fund. I think this is one of the things that also helps you get motivated, because if all you're doing is putting money away, paying debt, investing, and so on, sometimes you just wonder, man, I'm working so hard. This is crazy, right? I don't see an end in sight. But if you take some time to also say, you know what, I'm going to go away next year. So start saving for that, because there's going to be tickets, right? Other travel expenses, and then money to spend when you get there. So start putting some money away now, because that also relieves the stress, number one, because you're not using a credit card or tapping into an emergency fund for that. But number two, you have something that you're contributing to every single paycheck or every month that you can now see and feel. So you start getting even more excited about it, because now you have something to look forward to. Whenever that payment comes out of your check and goes into that fund, now you're like, wow, this is my vacation fund. Like, you start looking at it, right? You start thinking about it in your mind and get really excited. So that's also something that I highly recommend that you do. Another major thing, this is very important, is checking your credit report. Most people don't have their credit checked unless it's someone else running it for them. And it's usually at the time that you're applying for something, right? If you're going to apply for a new mortgage, you're going to apply for a new credit card, you're going to apply for a new apartment. That's typically when you have your credit checked. But don't wait until you have to have one of these major decisions made to have your credit ran by someone else, because there could be something there that's erroneous, that's hurting you, that you're not even aware of. So I'm going to give you resources. You can check it in the resource section, but it's annualcreditreport.com. You can check your credit for free with all of the three major credit bureaus, which are Experian, Equifax, and TransUnion. So one great thing you could do there, number one, check your credit. If there is anything that is inaccurate, you can contact the credit bureaus to dispute it. And they make it very easy to do that. So that's very important. You want to be proactive, not reactive. You don't want to apply for a car loan and then they tell you, hey, your credit score is this. You want to get ahead of it, right? The other thing that you can do there, you can click on the identity protection tab, and that allows you to freeze your credit score with all three credit major bureaus. So I'm going to tell you very briefly what that is, in case you're not aware. When you freeze your credit, you're able to prevent anyone, including yourself, that has your personal information from opening up new credit in your name. The reason that's so important is because we see a lot of places now get hacked. I mean, I feel like every week I see something in the news about a huge organization that had some sort of hack, right? So if you have health insurance or life insurance or anything like that, or even banking or credit cards, right? A lot of these major companies get hacked. And what happens is sometimes these hackers get access to your personal information. I see a lot of other data breaches where they might have gotten into some Gmail accounts, for example, and they may have some of your passwords. So if you put a credit freeze, it doesn't prevent you from using your existing credit. So if you have credit cards, everything that you use, you can continue to use without any disruption. But you put a block basically on your report so that if somebody inquires, including yourself, they get blocked from access to your credit and they could not open an account in your name. So this is very handy and you can do this for free. So go to annualcreditreport.com. The cool thing about it too is that once you set it up, you can unfreeze it and freeze it as you wish. So if you're planning on making a major purchase, let's say it's time for you to get a new car. So when you know you're going into the dealership, they're going to run your credit, you unfreeze it, you go in, you have them run your credit. Once it's approved, you just lock it back up, right? So it's very easy to turn on and off, and a great way to protect yourself. I'm going to give you a bonus one too. This is something I recommend my clients do as well. Because of all these hacks, a lot of these hackers, what they do sometimes is they file a fraudulent tax return. And because they have so much information, sometimes they're able to file a fraudulent tax return impersonating someone and get a refund. And then by the time the real person goes to file a return, right? The IRS says, no, we already have a tax return on file for you and we already gave you your refund. And you're like, what are you talking about, right? So that's going to take a very long time for you to dispute that with the IRS, provide proof that it wasn't you, and you have to send copies of documents, IDs, all that. Trust me, you don't want to go through that. I've seen people go through that and take almost 2 years to resolve. In the meantime, they're holding on to your refund if you do one. So what the IRS has started doing was before, they would provide an identity theft protection pin for people who were victims of identity theft. However, now, thankfully, they're being proactive and saying, you know what, we can give this identity theft protection pin to anyone, even if you have not been a victim of identity theft. So what that means is the IRS is going to give you your unique pin that has to be filed with your tax return in order for them to process it. And the pin changes every single year. The process to get it, I'm going to put a link. You can go to irs.gov and just type PIN in the search box and it pops up, but I'm going to give you the direct link in the resources section so you can go ahead and click on it and do it yourself. It's a little bit of a pain to set up. You know, I did it myself, and you have to do it on a phone and they take a photo, you got to upload an ID, something like that. It's not the most convenient thing to set up, but once it is set up going forward, then it's very easy to just log in, get your PIN every year to file your tax return. Just make sure that you provide that to your tax preparer or that you have it handy if you prepare your own taxes, because if you do not file with that identity theft protection PIN, your own return would actually get bounced. The IRS will not accept it. So it's another great way for you to protect yourself, and it's also free. So if you haven't done that, it's a great time to do that. The next thing is checking in on retirement contributions. I'm hoping that you're able to max out your 401k. If you're not, at the very least, just check in and say, hey, am I taking advantage of my employer's matching contribution if there is one? You know, I work with a lot of high earners who are fortunate enough to be able to max out their own contributions to their plan. So check in, you know, are you contributing on an even pace to be able to fully maximize your 401k contribution towards the end of the year? Because if you're not, there's still time to play catch up. Speaking of catch up, for those that are ages 50 or older, there is a catch-up contribution. So the standard contribution to a 401k is $23,500 in the year 2025. If you're 50 or older, you can do an additional $7,500 as a catch-up contribution for a total of $31,000. And even more, if you are between the ages of 60 and 63, you could do an additional $11,250 instead of the $7,500, right? So you can do a super catch-up contribution. So sometimes I worked with people who were so used to maxing out their 401ks that they, then they turned 50, just didn't realize it or didn't know that they could in fact contribute more. So it's another great way for you to say, hey, did I turn 50 this year? Can I do the match-up, the catch-up contribution? That's another great way for you to max out those retirement savings. Also, tax withholding. I'm going to provide a link also in the resources section. Very important. There's a lot of people that don't realize that they're not withholding enough from their paycheck to cover all of the taxes. One thing I see a lot of high earners run into trouble with is because you might be withholding enough from your paycheck, but that's not the only income you'll have. Typically, if you have a high yield savings account, you have your emergency savings there, you may have investments, right? So you have dividends, you may have capital gains. The withholding that's happening in your paycheck may not necessarily be enough to cover all of the tax due if you have other sources of income, like interest, right, in the bank, or CDs, high yield savings account, dividends, capital gains, and so on. So this is one of the things that you want to be on the lookout for. So there's an IRS calculator where you can plug in your numbers, and it kind of gives you, a pretty good idea if you want to do this yourself, as to whether or not you're withholding enough. Sometimes something may happen during the year where maybe you sold a piece of property and you have some capital gains, or you sold a business, right? So you have to plan for those, because your withholding from your paycheck may in fact not be enough. So you want to make sure that you are withholding enough taxes. Now, another thing to look out for on the other flip to that coin, you also don't want to be over withholding, because in reality, I always tell my clients, you don't really want a huge tax return, because typically what that means, aside from any credit, like, aside from, let's say, if you got like a solar credit or an energy credit of some sort for buying a vehicle, aside from credits, if you're getting a refund, then you're probably overpaying into the system throughout the year. So you may want to actually lower your withholding so that you have more in your paycheck, and then you can deploy that cash for other things that are more beneficial to you, whether it's beefing up your emergency savings or investing. So that's another way of looking at it too. So you just want to make sure you have adequate withholding. There are some rules to follow, because you don't want to under withhold and have a penalty. But I also recommend that you don't necessarily want to over withhold and get this huge refund at the end of the year. So you want to have that balance, withhold enough to make sure you don't owe, but don't get a huge refund, right? And then use up all your money during the year for other things that are more in line with your goals. And another thing is just risk management in general. That could be insurance, right? So right now it's pretty cool maybe for you to take a look at some of the insurances that you have and see, just to make sure that you have proper coverage. I recently did a post on social media about having an umbrella policy, right? So if you have assets like houses, investments, things of that sort, and you're relying only on the coverage of your existing home and auto, you might be leaving yourself exposed, because those may not necessarily be enough to cover you in case of a personal lawsuit, for example. If you're in an accident and you hurt someone, and they sue you for more than the coverage in your auto policy, right? That may not be enough to cover that liability, right? So then they may come after you personally. So I was talking about, for example, maybe it's a good idea to buy a life umbrella policy, which would acts as an additional supplemental coverage to your home, auto, and other policies. They usually come in a million in increments of that thereof. Not that expensive for what you're covering. So that's something that you want to look into. Just look at your liability. Am I exposed anywhere? Also, life insurance, right? Has anything changed? Is there a new addition to the family? Do I need more coverage? Am I overinsured, right? These are the kinds of things you got to start thinking about. Also, just regular estate planning documents. This is something I actually just did this with my wife the other day. We have an estate planning attorney, and we meet with them once a year. We already did our trust and will, everything. But every single year, we have a meeting and say, we like to do it during the summer, just as a quick check-in. Has anything changed? Has there been any added, has anyone died? Has anyone been born that wasn't there before? Are there any pets? Do you want to make any changes to your beneficiaries, right? In your 401k accounts, in your life insurance accounts? Life happens, and sometimes you don't necessarily think how one thing may impact the other, right? I was talking to a client the other day, was telling me that they knew someone who still had their mom as the beneficiary in an old 401k from an old job, but they've been married for like 10 years, and those things actually happen. So you want to do those small little check-ins and make sure, hey, are my wishes going to be carried out? Is this what I want? Is it on paper right now, right? I know that some of those conversations can be difficult to have, but we all need to have them. Even just like healthcare proxies. When I was doing the review with my attorney, they were asking me, do you still want to use the same people as your healthcare proxies and financial powers of attorney in case you're incapacitated and so on? Like you want to, have those conversations. And, and again, even if you're not hiring a third party, just log into your 401k account and check the beneficiaries. Log into your life insurance, check the beneficiaries. Make sure all that stuff is truly what you want. I think it's a lot easier to get things accomplished when you break them down into smaller tasks, because if you wait, then you have to do a lot more at once. And then you're just going to get discouraged from doing it and not do them at all, most likely, right? So if you can just break stuff down very small, hey, something as simple as I'm just going to log into my 401k and see if the beneficiaries that I want are currently the ones there. That's it. Very simple, right? Probably just take a few minutes to log in. So as a recap, make sure you revisit your goals. Are you still on track? Has anything changed? Or gets measured, gets improved? Do I have enough emergency savings? Do I need to continue to add to it? Right? And where are those emergency savings? Can I put them in a high yield savings account and start making more interest if they're just sitting in a regular checking account or savings? Check on your budget, right? Manage your subscriptions. Can I cancel anything? Can I swap anything out? Where's my holiday spending coming from? Did you go on vacation yet? Where's the next vacation coming from? Do I have a vacation fund? Right? Make sure your goals are not on vacation. Check your credit report on yourcreditreport.com. Also, see if you can do a credit freeze if you haven't already done so. Do the IRS identity theft protection PIN. Check in on your retirement contributions, see if you're on track to maxing out your 401k or retirement plan and taking advantage of any catch-up contributions based on your age. Make sure you're doing proper, adequate tax withholding. And finally, risk management and estate planning. So check in on your insurance, beneficiaries, estate planning documents. So thank you all for tuning in. I'm super excited to be back. I plan on doing one episode a month at least. I will continue to have guests going forward. Same format as before, just new name, build a better financial future. Ultimately, the onmywaytowealth.com website will forward to buildabetterfinancialfuture.com. You can go to both anyway, but buildabetterfinancialfuture.com is going to be the hub for everything, right? So as always, if you have any questions, you want to just say hello, anything, send me an email at hello@buildabetterfinancialfuture.com. Thank you for tuning in, and I'll see you on the next episode.
Thank you for listening to the Build a Better Financial Future podcast. If you enjoyed the episode, please remember to subscribe and share it with someone who could benefit. To learn more or connect with us, visit buildabetterfinancialfuture.com. This podcast is for informational purposes only and does not constitute financial, legal, or tax advice. Please consult with your own professionals before making any financial decisions.